started the recording. Make sure I'm using the correct microphone. Perfect. All right, let's get the party started. In case you haven't yet, I'd highly recommend to watch the video that I uploaded last night. If you go over to my YouTube channel, accumulation/zone, I uploaded this video, my ICT trading secrets revealed midweek recap, where I essentially recapped the entire trading week. Just out of curiosity. Let's see if ICT is still live. Yeah, he's still live. So I guess most people actually jump over on his live stream, and I don't judge them. Just wondering what he's talking about here. Did he take longs off the new week open, new day opening gap? No, he did not. Well, anyway, my opinion is simple. If you watch the 2024 mentorship and you will, because you failed to be profitable so far, watching a 2022 and all these other mentorships, then sorry to tell you, but most likely not gonna find success after this one. That's just my opinion. Good morning, Memory of Tree. Starting this live stream a little bit later than usual, but that shouldn't be an issue. Let's see where we're currently at. So right here I prepared a 50% Fibonacci range tool, looking at this entire move to the downside, which started yesterday. We're above the 50% of total range, above the 50% level of the overall range, coming in right here at around 18,200 of only yesterday's range. And if we look at the range of this entire week, we're also above the 50%. That's essentially where we had this entire move from. So we moved above it during Asia, very similar to what we saw on Tuesday and also on Monday. We open up, we have this run. Early London, we get the VWAP retracement, and then we consolidate and bounce from here into Asia buy side or previous day's high buy side liquidity. Same thing here, we get the early Asia session run, retracement, continuation. We get the run, we get the VWAP retest, and we immediately bounce from here. And because I was up early this morning, just want to make sure I'm not missing out on anything. No, I don't think so. I essentially did the same thing once again that I've already successfully done yesterday, but with a little bit more confidence and more risk. So once I've seen Asia run most likely being over, confirmed with this market structure shift right here, I've seen we retraced, continued lower, and at around 1 a.m. New York local time I was actually up and running. I was looking at the 15-minute time frame because I like to keep it simple in the mornings. I've seen the inversion fair value gap right here. I've seen the New York midnight opening retest, and then exactly on which candle did I enter again? I'm pretty sure it was this one. I just had to. 1 bar stop, targeting that VWAP once again for a little bit around a 2-to-1 risk reward. So I didn't actually trade it until it hit the VWAP. I took profits before that, and then once again I was waiting to see the reaction of the VWAP. Kind of had a trend line sort of forming here with lower lows and lower highs. We smashed through it. I wasn't part of the long. I admit I tried longing it right after the 3 a.m. move to the downside, because we had a nice 15-minute time frame for value gap sitting here. So I tried to take longs of this 15-minute bullish right here. Obviously that didn't play out, and we headed lower below that 2 a.m. sell side liquidity. And from here, I think the only thing that I've done during the London session was to actually short from here into sell side liquidity, just to grab a few points and get rid of some of the losses that I've faced after trying to long it here already. Then it took a while. I got back to the charts at 8 a.m. and I was fairly confident that this trend line low resistance liquidity run most likely is going to play out over the news event, so I decided to take a news trade base. Also, when I looked at the 15-minute time frame, I liked what I saw. We had a nice 15-minute time frame inversion fair value gap here after taking sell side. So after we took sell side and after the massive drop that we've seen yesterday, unfortunately, after our live stream, we're gonna talk more about that in a bit. I think no, I didn't talk about it yesterday in the video, or did I? I'm not sure. I talked so much during last night's video. Let me take a quick look. Oh yeah, I actually replayed it. So if you want to watch my thoughts and how I executed, for example, this short right after the live stream, we'll talk about that more, then make sure to check out that latest video. 15-minute time frame. We're pushing higher towards the next short-term high, getting closer and closer to the high of week. Currently only 250 points away. Totally possible for a New York session, if you ask me. Did any of you catch the log? When I got home, I quickly checked the chart and I've seen that we had the opportunity to long right here at 9:55 before 10 a.m. But I quickly jumped under the shower before I started the stream, unfortunately missing out on this continuation trade opportunity. I think other than this, there really wasn't another good opportunity besides maybe the inversion fair value gap on a 5-minute time frame. So we know we have this huge inefficiency sitting right here. Eventually we're gonna deliver into it. We went higher, close below it right after the New York Open, come back to retest it for a nice trade to the downside. I wonder what I would have targeted, but 120 points back to the Asia session high, the New Day opening gap would have been pretty nice, and then from here on follow it on a 1-minute time frame, actually with a textbook inversion fair value gap set up here. So I think we've already seen a few good setups. On a 5-minute time frame, it would have been the inversion fair value gap, and on the 1-minute time frame, essentially also an inversion fair value gap setup right here, but you had to be quick to catch this one. That's for sure. I would have likely also waited for the VWAP retest, so not sure how I would have acted if I would have traded this live. Memory, did you take a trade this morning? Right after the New York Open? Drawing options aligned. Getting closer to our previous week's low. Coming in at... It's actually worth it to have a price label here. Fair enough. I'm pretty confident that I would have entered the long on 100k account. 50k is already done after this nice and massive move into favored buy side liquidity. I really aimed for this one because on the higher time frame, if I look at all the stuff, let me grab it and put it into group 1 and now disable it. On a higher time frame, we still have 2 4-hour bearish fair value gaps here. This buy side liquidity that I pointed out on the 5-minute time frame lined perfectly up with the second 4-hour bearish value gap, so it just felt like a decent profit target. Also, if I measure out this entire range, this entire move to the downside, the 50% level also lined up perfectly with it. So overall, it just felt like a pretty good target to have. Looking at the 1-hour time frame, consolidated all morning, all London session essentially, before trading back up higher. The final fair value gap we had as support has already been delivered into during the Asia session. This is this initial reversal setup we've seen here during London, where we took out the previous day's low, close above the lowest 15-minute bearish fair value gap. We even got the retest right here. So this is the lowest 15. No, not like this. Like this. We get the retest. And we continue to run up higher. And then consolidated for a long time before actually taking off. I'm pretty confident, unless we get any significant signs that price wants to turn around, that we could run back into yesterday's highs. I don't see a reason why we wouldn't. Just want to quickly refresh my drawings. Because when everything is so cluttered, if I turn this back on, I can't really think. Not sure if you, I don't know, think like that as well, but if my chart looks like this, it's just too much. That's why I like to start new and fresh, drawing templates over the week. New week opening gap, Friday 6 p.m. Friday 6 p.m. Let's actually change this to H1. Makes more sense. Save as H1. We have our new day opening gaps, right? New day opening gap right here. Those are these main areas that I like to keep track of throughout the entire week. The deeper we actually go into trading week, the more information we have. Towards the end of the week, that's usually a little bit easier. And right here, there's that next new day opening gap. If we look at electronic trading hours for today, we've already filled in the gap. So there's no gap right here anymore. What's interesting now here on the hourly time frame, we still have all the buy side above. Like I said, unless we get a sudden market structure shift up here, I don't really see a reason why we should go lower based on the hourly time frame. Low of week. And now it's much easier to look at the charts again. I have all my important new day opening gaps, hourly time frame fair value gaps, new week opening gap, low and high of week. Don't really think we need buy side liquidity up here, but maybe for tomorrow. Buy side liquidity, top. We never know. Buy side liquidity. Buy side liquidity. Perfect. We have the new week opening gap lined up here, the consequent encouragement of the new week opening gap. Yeah, right now I'm curious to see essentially where we are going to take this. We retested the lowest bullish fair value gap. Most recent market structure shift. Sorry. Higher high, higher low, higher high, higher low. Yeah, it's this one right here. 7, 8, 9, 10, 11, and then we just dropped. Most recent bullish market structure shift essentially right here. But I don't like these lines. I'm just pointing it out because that's essentially the breaker block that we're currently trading through. These down closing candles right here, and then this down closing candle right here of the most recent leg to the upside. That's why I personally wouldn't be completely surprised if we turn around somewhere here. I mean, there's plenty of hourly bearish fair value gaps. Let's maybe drag these out. H1, H1. There's no bearish fair value gap higher than this one, besides the inversion fair value gap right here. So this is definitely the area to close above. Looking at standard deviations, we reached 3.5 to 4 standard deviations on the move to the downside of that final manipulation, that final move to the upside. Higher high, higher low, higher high. Reached 4 standard deviations, so that's good enough for us to turn around to see the final manipulation to the downside. We really would have to look at the 15-minute time frame here. Do something like this or this. Get an idea of how high this could actually run after taking out all the sell side liquidity that has been created on this Monday, Tuesday, Wednesday up, Wednesday reversal, take out that lowest sell side. Bottom left. So yes, I do think this has potential to run. We have those last 1 hour bearish value gaps. We're also trading. Hang on, let me annotate this here as well. This is high of the 4 hour value gap. H4 value gap high. Now I think I should have all the important information on my chart. 4 hour fair value gap high lines up with that highest breaker block inside 2 hourly bearish and inversion fair value gaps right now. Now I think if you missed the long opportunity here, catching on with this trend, it's not worth it to enter long up here. You had an opportunity to go short. We already talked about it with the inversion fair value gap right here. And then catching the long of this new day opening gap. after the lowest 1 minute bearish fair value gap has been invalidated. Good morning, guys. Good morning, Kati. Good morning, Mali. Heading towards the 4-hour fair value gap high. But like I said, entering up here, stop loss wise, it's just difficult to place your stop loss. Okay, so we hit the 4-hour fair value gap high. Price most likely going to push towards the new week opening gap. We have 3.5 hours before we get the next 4-hour time frame candle close. I think that's a good point. We're likely going to see some sort of a rejection of that new week opening gap to form the next higher low before we push back through that high of week again, in my opinion. Let me add a price label so we have it on the chart. We have our manipulations to the downside right here at the low of the day. London open manipulation. Now everything is up to date. Let's see if we can spot some rejections and maybe look at a few other charts. Maybe Euro, US dollar, or gold is giving us a decent opportunity this morning. Already content so far with the profits after catching this massive long at 8:30 right here. Could have kept holding on to it, but you never really know, especially once it hits the 50%. The weekly VWAP, this blue line right here on the trade locker chart. Pretty happy with that. The face, no, it's a one step 50k account with funding pips, and it's up $4,000, so $1,000 more, and I'm funded without having the annoying two-step challenges and all that stuff. So that's why I decided to go for the one-step challenge again if I'm getting new funding pip accounts. And yeah, so far that's going pretty well. So instead of doing 8% and then another 5%, totaling up to 13%, I'm just doing 10%. Still waiting for the last two, and on a 100k, wherever it is, right here, also up 250 from the short this morning to the VWAP. Yeah, unfortunately not able to catch the long. Let's see how that would have played out if I would have entered long right here based on conviction that ES is going to follow, NQ is going to follow ES. What if it a 1-to-1? Yeah, that's really all I would have asked from it. I think we've drawn everything up. New week opening gap. We did hit the new week opening gap right here. Barely. But once we've hit it, we immediately reject it. 1, 2, 3, 4 pushes to the upside so far. So it's going to take a while for us to actually get a decent short kind of setup, if you ask me. I mean, for the market structure shift, we essentially would have to move back below this low. This is our most recent higher low. And inversion fair value gap wise, we only have one bullish fair value gap on this entire move to the upside. So even on a 1 minute time frame, would take a little while before we actually get a short setup, unless we go higher one more time. So now that we're done with NQ, let's take a look at the S&P 500 and where we're currently at on this one. Similar chart, we filled in the new week opening gap yesterday. We still have some buy side liquidity targets here to the left. We've already hit them on NQ. So there's high right here at 5323.75. And essentially all these short-term highs are buy side liquidity targets. This is our high of week. Make this purple. Make those ones thin. Also at the high of the highest 4-hour bearish fair value gap, also took out sell side liquidity just by looking at it on 1 hour time frame. Also with that same market structure shift here at the high, but did not reach 3.5 to 4 standard deviations like NQ did. We have the new week opening gap. I don't really think I'm gonna look for anything on the 5 minute time frame. This is what I meant with a conviction trade. So right here at 9:50 a.m. we took out this relative equal low sell side liquidity, and then we had a massive bullish engulfing at 9:50, forming a new high of day. And on NQ, if we look at the time to see what happened at 9:50, we've seen that NQ was lagging behind. Even at 9:55, NQ did not form a new high of day. So essentially, well, this could have been a good opportunity that, or an indication that that NQ, the Nasdaq index, is lagging behind, to go long on it. Watching the 1 minute time frame, we're pushing up another time. Now our market structure shift level moved from down here to up here. But once again, we don't really have many. I wouldn't even use 1 minute time frame inversion fair value gaps. On a 1 minute time frame, I'd really wait for the market structure shift to happen first before anything. Don't really think these are helpful either. For now, I just want to get rid of them. Keep the charts as clean as I possibly can. Buy side liquidity. Right here. Now let's just use the horizontal ray. Maybe talk a little bit more about what happened yesterday. I already covered it in, I think we just reached buy side. Yep, we just did. So those are the only short-term highs before we trade into this fair value gap and before we really consider these highs inside the new week opening gap to be a likely target. So if we get something on the 1 minute time frame now, like a market structure shift, right here we could easily target at least the next higher low, potentially even this low, a decent retracement is definitely necessary, unless we just keep on running today. Like I said, we would have room to run all the way up into the 18,750 levels based on our final manipulations here on the downside. But what I want to do now is to look more at what happened yesterday. Because on the stream, if you remember, we looked for, I think we've been short of this inversion fair value gap right here. So once we close below, we entered short on the inversion, targeting the sell side liquidity right here. Because we've seen failure to continue higher. Unfortunately, well, after this 10-15 drop, we've seen exactly the same thing, but this time failure to continue lower. So we just go sideways with a bunch of inside bars, essentially here. And then we turn around, leaving behind a new inversion fair value gap right here. And I actually tried longing this. So at this point in time, I'm down 1%, trying to short it right here with 0.5% risk, and longing it up here into new buy side with 0.5% risk. After making 1% profit on the initial long into the previous day's high. Okay, it's not showing here anyway. Longing of this bullish fair value gap after the market structure shift right here. 2-to-1 risk to reward. So I'm back to break even. Didn't really like that, to be honest. So after being wrong twice, the chances of me being right, I think it was possible, unless we just really keep on chopping. That's the only time I'm losing that third trade. So after this inversion fair value gap failed and the initial inversion fair value gap failed, so I took shorts from here and longs from here, I decided to go try it one last time and go short of this inversion fair value gap, which eventually played out and left this this M formation pattern, so double top formation, M pattern, whatever you want to call it, behind as the high of the day. And then we just kept on running, and I was easily able to target my 2-to-1 risk to reward and close the account in profit for the day. But yeah, weird price action. I really didn't see this type of pattern being left behind as the high of day. I really liked what we've seen on Tuesday. Right here with the clean higher high, higher low, higher high, market structure shift, retrace into the bearish fair value gap, and smack down. Textbook 2022 setup. We didn't see that at all yesterday. Instead, we got this M formation, and essentially you would have either you would have had to be very bearish on the day overall. I was neutral, to be honest, essentially ignoring all the long opportunities here at the high of the day. I tried it anyway, so I went short, then I went long, and then I went short again, ending up long, short, ending up with 1% in profit, risking 0.5. Then a few other opportunities to continue further to the downside, but I've already talked about this on the recording. Interesting. No bullish fair value gap on a move to the upside here. We hit one buy side level, but we didn't clear 18,410. It's worth a paper trade. Not worth a trade on the funding pips account just yet. Don't want to be that guy who tries to short on a 1 minute time frame when price is clearly in a strong uptrend. So now we have this break in structure, bearish fair value gap. Let's take the short from right here. Target this low, which lines up with this 5 minute bullish fair value gap right here. Stop loss being at the high. Just for the experience, essentially. Let's add one more sell limit when we actually hit the bearish fair value gap again, if we do. New 15-minute candle also opening up. Yeah, here. We have now a 15-minute bullish fair value gap. Right here on our take profit target. A pin bar bearish engulfing right at the high. I think this low could be hit. Like I said, not gonna take this on one step 100k challenge. It's not good enough of a trade for me personally to risk equity on. Alright, we've got filled with the second position. Let's see if we immediately close above this bearish, be less interested in actually holding. So I would handle it on my funding pips account. And so we closed above, but we opened right on the high. So it's a gray area. Theoretically, it's not broken just yet or invalidated. But most likely gonna see the stop being run paired with this buy side liquidity. Without tapping the 5-minute bullish. That was the idea. Retrace to the highest 5-minute bullish, 15-minute bullish, and then do whatever it wants from there. But after this little break in structure, the first break in structure we've actually seen, and the bearish fair value gap to deliver lower. Alright, so we're stopped out. Now we cleared buy side. Let's see what happens next. Take a look at Forex Factory, only unemployment claims today. Line. Interesting. Tomorrow, no news at all. Good. So we keep on forming higher highs and higher lows. Let's see if we can push towards the 50% of the new week opening gap right here at 18,450. Let's make it simple and call it 18,450. Next buy side above would be sitting at 18,488. I'd be happy to keep on longing personally if we would have hunted some short-term lows, some higher lows. Then I could label it as a stop hunt, reversal, inversion, fair value gap, continuation higher, but I can't. I'm not gonna long the high of day here. Yes, just keeps on trending up higher as well. Ooh, interesting. Kati, did you enter long? I'm asking because we do have SMT divergence right here. The S&P 500 actually took out this 10:33 a.m. low, while NQ did not. With the new 15-minute volume coming in and theoretical inversion fair value gap right here, if we would go down maybe to the 30 seconds time frame, this would actually go through as a market structure shift or break in structure. Lower low, lower high, lower low, SMT divergence, and then we have the 1 minute time frame inversion fair value gap as our entry. Possible a bit of a stretch. I took a sell break even hit. 8:30, 15-minute candle, no wick. Let me take a look at it. Yeah, the 8:30 candle has no wick. I was surprised. I mean, I've been in that long targeting this high all along here on the Funding Pips account, but when did you take that sell at 8:30? You most likely took a sell up here. The same one I took with the paper account. Yeah, I mean, it's perfectly fine to try to short this. But usually from experience trading this on the 1 minute time frame typically doesn't happen on that first sign of weakness. Usually you catch 2, maybe 3 losing trades before you really catch the high that sells off. I wanted to take a look at gold, see what that's up to. We looked at it yesterday with H. Smith. We targeted 2,450. Let's look at the 4-hour time frame. Maybe makes things. Oh, all right. Before that, let's take a look at the short you took. Took a say at 9:40 a.m. Fair Value Gap, New York PM session high taken. SMT also given target 8:30. I know which one you mean. Took a sell 9:40 a.m. So right here. Previous PM buy side hit, yeah. Yeah, I guess for that the market overall today was just too bullish. I mean, like I said, I would have also, unfortunately, I wasn't around at the 9:30 opening. I would have been on the 5-minute time frame, seeing the inversion fair value gap and the huge inefficiency below us. So most likely that would have been a 1-to-1 risk reward trade for me. Not sure if I would have targeted a 2-to-1. I could have, but with spread and all that stuff, most likely wouldn't have been hit. Depends. Hard to say if I would have secured profits after a 1.5 1-to-1 risk reward, but this would have been the entry. 830 low, yeah, would have been a target, but well, depends what you get. And following price, and then we've seen a bounce after a perfect touch of this new day opening gap, 50%, lower low, lower high, lower low, break in structure, inversion fib. Of course, easy to point this out in hindsight. Much harder to do when it's actually trading live at this point in time, on the 1 minute time frame especially. It's really an art in itself. But once you see this after tapping the 5 minute, the chances of us maybe going down into that, like you said, break even has been hit. So I think in terms of risk management, you've done everything right. Your bias was just slightly off today. Then you most likely didn't anticipate the continuation up higher because there was SMT divergence between ES and NQ. ES has already cleared this high at 950. So right here on this candle actually pushed up above this high on ES. So most likely you were a bit hesitant taking longs because of the fact that there is SMT divergence. All right. Could be right at the tipping point. We do have an inversion fair value gap right up here. Highest high at 1050. 1050 to a lower high. There's no SMT divergence just yet at the highs. Like I said, you don't want to be the one shorting too early. Last level of defense would be this bullish fair value gap. We already tapped it once. Else we are just going to see yet another higher high, higher low to be formed. Higher low, higher low, higher low, higher high, higher high, higher high, higher high. But what we do see is that this entire range of these higher highs and higher lows, it's starting to squeeze a little bit, if you ask me. It's getting compacted. That's the inversion fair value gap. Let's head over to gold. On the 4-hour time frame. W formation, we did hit buy side right here. I know gold is kind of weird at the moment. Hard to make sense out of it on a daily time frame. Usually when it's like that, I would simply base it on the 1-hour time frame and look for lower time frame scalps. Buy side liquidity. We've been bullish all morning, all Asia, all London. With a nice hourly bullish fair value gap. And inversion fair value gap here. So if we're going to deliver into this buy side, the thesis, at least in my opinion, would be that we most likely gonna find something on a lower time frame within this area. I don't know exactly where. So let's see what happened here on a lower time frame. 850, 915. We retraced into the area, into the hourly bullish, and into our inversion fair value gap. 930, 925, here's 930. We open up, close above the highest bearish fair value gap after 3 pushes higher. So we have first one, second one, third one. We take out all these lows, hunt sell side liquidity, retrace into the hourly bullish fair value gap and inversion fair value gap, close above the highest bearish, without taking buy side liquidity here just yet. Then we leave behind us bullish fair value gap right here, which, you know, essentially would have been best entry opportunity to target longs into 1 hour time frame buy side liquidity for a quick scalp. Right here, if we would have entered off the bullish fair value gap into buy side, that's 8.5 points. Not sure how good that is on gold. I haven't been trading it too often. But the idea stays the same. We look for high probability areas on the hourly time frame where price could deliver into our drawn liquidity from. Sort of being this hourly bullish and the hourly inversion fair value gap. Well, and then we found our entry opportunity here on the 5, and if we would break it down to the 1 minute time frame, we've seen we've been in a slow and steady grind lower, respecting bearish fair value gaps. And then for the first time, come on. For the first time within this entire downtrend, after tapping the hourly bullish fair value gap and inversion fair value gap, we stop respecting bullish fair value gaps. Now let's see what time that's just before the New York Open. So we do close above that lowest bearish fair value gap, come back to retest the inversion fair value gap and continue to rally from here. That's how you could have picked the low for a much better entry, targeting the strong liquidity for the reversal. Inversion fair value gap, bullish fair value gap right here, and lower low, lower high, lower low, lower high, lower low. This would be our market structure shift right here. Market structure shift bullish to catch the long. Let's go back to NQ and see if we trap between both of these fair value gaps, the bullish one and the inversion fair value gap at the high. I think it's time for a retracement. You too, Molly. Take care. Take care, Kati. Until tomorrow, London. New hourly candle opened up. Still being trapped between those gaps. Let's see, once we close below that lowest gap, maybe we can catch a inversion fair value gap short into the next lows. Otherwise, most likely it's looking like to be really honest with you, Memory, I didn't even watch a single 2024 lecture, video, live stream, whatever it is yet. I've only seen it on Twitter that some people start taking notes and blah, blah, blah. I don't know, for me personally, I feel like that study time is over. I don't need anything to add to the repertoire or to the toolbox, if you know what I mean. Already got all the tools that I need. I sort of formed my own ICT trading style, and I don't think it's beneficial for me personally to add more to that, unless he's dropping the bombshell of all ICT concepts. But I think most of it is gonna remain the same. I'm curious though to see how he's performing on the Robbins Cup and all that stuff. Guess we'll see. Eventually, everyone is gonna go through that same phase. Even you. Who messaged me last time? Who used to be on our live streams almost every day? Dirty Ryan, Fady. If you remember Fady, Phadeee. And he recently messaged me that he started doing his own thing. So I think he's been around for about 6 months here on the live streams. Just, yeah, I don't know, trying to expand his knowledge with the stuff that I do. But eventually he also decided to take off the training wheels and stop watching anyone while you're trading, essentially, and actually do your own thing. Go out into the wild, wild west and trade you. And that's essentially how I feel with ICT and other people that are live streaming or live trading. Sometimes I'm curious and I tune in into live streams just to see what those people think at the moment. But usually that's not really adding any value to what I'm currently doing. Usually I tend to watch them in hindsight. Right, let's see, do we get the close below? Haha, come on. We do get the close below, but unfortunately we have already hit the first sell side target while doing so. Sell side target, sorry. Okay, we missed the inversion fair value gap here just by a bit. What's the time? Yeah. Unfortunate. We were there. We anticipated the drop eventually. But every time once we hit or formed a new lower low, we retrace, and once we actually started to break lower on this 5-minute candle, we've already hit the first target we outlined, and then did not retrace all the way up into the inversion fair value gap before taking out more sell side liquidity. So let's remove that limit order. Yeah, and those are just those things you don't need to be lectured about. You just pick them up along the way yourself. 30-30 reversal. That's funny. He said that in his first lecture. Okay, maybe I'm gonna give it a watch then. On the weekend. Good old 30-30. But I'm gonna watch it on 2x speed. 30-30. That's too good. Yeah, but that's just something I noticed over time that, damn, why do all these losing trades keep happening around the 30-minute mark? All right, okay, so you look deeper into it, and you start to notice a pattern. Okay, this might just be a 1 week kind of thing, so you keep an eye on it for the next week, and you keep seeing that similarity week after week after week, and eventually it turns into your own concept, like 30-30. 30 Ryan actually gave it the name. Confluence on what you've been teaching, like inversion fair value gap. Those inversion fair value gaps, I didn't start out trading ICT concepts looking at inversion fair value gaps at all, because they never really been the topic during 2022 or all these other mentorship and video series he did. I think he's picking that up now in his 2024 lecture. Let's see what happens after we take out these lows. Are we going to continue lower, or are we immediately bouncing back up? Next target would be down here. Based on what I saw, I feel like that is more significant than fair value gap. I'm still studying on what kind of inversion fair value gap not suitable to enter. I'd make it simple and say inversion fair value gap to not enter on would be the inversion fair value gap that formed without taking out the liquidity in the opposite direction you're looking forward to take a trade in, if that makes sense. So if you're looking forward to take a long, you want to see the most recent high being cleared. That's for sure. So like right here, we take high, we close below, we use the inversion fair value gap and deliver lower from here slowly. If we compare it to, well, for example, if we have the high and we get the inversion fair value gap right here, no, that's wrong, but we fail to make the higher higher, and then we get the inversion fair value gap, then it's just too risky to take the inversion fair value gap short here, because it could just easily be doing something like this, like a bull flag formation, forming a lower low, and then taking out the highs. Just picking up more steam with one more lower low before actually continuing higher. So you definitely want to make sure that buy side or sell side for the short case has been cleared first. Yesterday you had this problem. What time? Oh, look at that. We even have the 5-minute inversion fair value gap. But not really at the high, so I don't know, could be rather dangerous. Here we have the market structure shift now. Inversion fair value gap just below it. I'll check it out in a sec. Right now I'm playing with the thought of taking a short like this. The only thing I don't like is that we are just inside a U, which could be a 15-minute bullish fair value gap, but I do like the idea. So happy to risk 250 on it. Already tagged. I have a 5-minute time frame bearish fair value gap. I like to combine 5-minute fair value gaps with my inversion fair value gaps, because then I have something to actually invalidate my trade idea. So right here we have the market structure shift / breaker block. The bearish fair value gap. Let me quickly go. Hang on, memory of tree. Trying to concentrate right now. See if that overall makes sense. Our target, this is the next 15-minute time frame bullish fair value gap. Just marking this out. Okay, our take profit target is before that. Let's also mark up the inversion fair value gap here on the 5-minute time frame and see if we keep respecting it. We have 2 more minutes to go roughly. The storm closing candle would be our breaker block. If we immediately close above, I'm not interested anymore. But this way I both have the inversion fair value gap and the bearish fair value gap now. If I wouldn't have the bearish fair value gap, I don't know. Everything changed when I've seen the 5-minute bearish here as well. And we're pushing, 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 pushing. 1-minute time frame. 1-minute time frame looks like the typical failure to continue lower. Price action forming a low before we take out highs. So let's see if we get the chance to close early and maybe flip to a long. Offer is starting to get rejected now. 1 more minute to go before. All right, so I'm out of the short. That has been invalidated. Next buy side liquidity would essentially be at this high right there. So let's leave it that level. What time did this happen? 11:15, 11:25. So we could actually see the 30-30 continuation to the upside, unless this happens to be a complete fake out. Let's see how it goes. Risk management wise, we've done the best I could. Yesterday 8:54 a.m. 8:54, 8:54. Oh, right here. Yeah. 1 minute chart. So let's make it simple. Do it like this. $8.54. Yeah, I remember. To look for price has close above the inversion for leg, then I drop into 1 minute chart to look for the tight entry. I've done the same thing yesterday. I think we also talked about it yesterday as well. The 1 minute time frame entry with the inversion fair value gap. Sometimes it's just much easier. Not just sometimes, most of the times, to not look for that tight entry and to simply go with the 5 minute time frame. Perfect example yesterday. Of course, the risk to reward ratio is better and that stuff, but well, 1 minute time frame has likes to trap people or fool them. Yeah. Also look much worse, or like more likely to not play out overall if we look at it big in size and we closed above it but get back below, then we closed above. This one looked much cleaner. We reached into the 5 minute bullish fair value gap, we filled it in completely, and we immediately moved away from it. That's what I liked about this one. I simply, after losing on the first one, re-entered because I've seen that momentum here on, which candle was it, 925. Now essentially what I've done here is place a buy stop order above this high. So if we break back above this high, I want to be in a long targeting the previous day's high. That's what I've done there yesterday. But yeah, execution wise, it would have been much simpler simply by choosing the 5 minute time frame fair value gap, targeting that previous day's high or the high of the new week opening gap for the 2-to-1 risk to reward, without zooming in and getting updates every single minute. Did we get filled on that second? We did not. That's fine. Now let's see how this plays out. We now have the inversion fair value gap, the new inversion fair value gap overlapping with this bullish one. We'll see if it gets tapped before we actually break high. So if we get some sort of a M formation, double top formation, like we've seen yesterday, if we break the low, that's going to be it for me today. That's all I'm really willing to risk. I'm going to target the 1-to-1 risk to reward. No, it's more than a 1-to-1. It's the next buy side target here on the line. Looking at the 5 minute time frame right here, coming in at 2.5, 3 standard deviations. If yesterday's high is our draw on liquidity and we keep on pushing, that's most likely all we're gonna get in terms of a stop hunt before we continue higher. Already like the momentum here on the 5 minute time frame, how it immediately pushed up higher. Like I said, we just don't want to get into something like this. What we've seen yesterday. Before we actually went lower, what did we get? A pump. Failure to continue higher without taking buy side, and then we just, yeah, turn around. So very similar. First I took also today, took the short of the first inversion fair value gap. Didn't play out, so I closed, entered long, and then it turned around again and I entered short. Let's hope that today it doesn't turn around and I get it right on that second try. We'll see how it plays out, but I'm going to manage the rest of my phone. Going to have some dinner now. All right, memory of tree. Thanks very much for joining in, asking these questions. That's making it way more interactive instead of me just sitting there and talking to myself. So I'd say I'm going to keep you updated. Well, if I make any... nah, I'd leave it at that. Even if we break lower, most likely what we're going to get is a few more 5-minute time frame candles that don't go anywhere and stay within this range, and then we collapse, close below this bullish fair value gap, and then it's time to retrace deeper. And we've been faked out with this last pump for the double top formation here. Yeah, it's basically one-on-one mentoring if you think about it like that. I don't mind it at all. All right, but let's leave it at that. I have to get going. So yeah, until tomorrow. Enjoy the rest of your day. Bye. You're welcome.